Hello and welcome to the Weekend Investing Daily Bite of 8th of October and another surprise day. Like yesterday was a surprise on the down move. Today was a surprise on the up move. And now we can ascribe that up move to, a shocking reversal of uh, election results in Haryana. Or we may say that Hong Kong market cracked very hard today and FIIs have stopped or reduced their outgo from the Indian market, or it was a bounce from the recent lows after 4 or 5 days of drubbing. So whichever reason you wish to pick, the markets actually did well in the markets today. Should we sell based on news is the behavioral discussion that we will do towards the second half. Please subscribe to the channel. And you can see that as we were mentioning yesterday, we were near this support point. We have now made a good bounce of 0.88%, really not out of the woods yet by any stretch of imagination. The trend remains down, but maybe above this moving average, above the 2-day high, above 25,200-ish, we may start to look more stable. There is also a chance that Nifty may do a bounce to the average, then fall back again and complete this head and shoulders and then correct to maybe uh, somewhere near here or maybe lower. So all these possibilities remain open, but it's a good start of a bounce. All starts which start after a fall look like it's a dead cat bounce. Like for instance, this rise after 4 or 5 sessions of down was looking vulnerable. Then after 2 sessions, we also had a down day, and it could have gone this way, but it recovered on the other side. So similarly, I think this 25,176 or nearabouts will remain the point of uh, decision making for the market. Nifty Junior also strong comeback at 2.35%, virtually erasing all yesterday's losses um, and coming back to this near the average. Again, a very sharp bounce, but down moves have very sharp bounces. So you can't really say that the worst is over until, let's say, we cross beyond this line, and that may be a more stable point. Um, Mid caps actually looking much better, 1.98% up, again erasing all yesterday's losses and comfortably above 21,600 here. Small caps took a good support at this gap level that we already have here and bounced again. So in all charts, the charts look very, very similar. This plus 2.1% on small caps. It may be a dead cat bounce. It may be a reversal. We will only know after a few days. Bank Nifty, shortish or smallish bounce completely inside day. So before 51,730, really nothing can be said. But at least we didn't go further lower, which is the relief for the day. But again, this is also could be looking at some sort of a down if we break yesterday's low. So in most of the charts, yesterday's low becomes now the most important technical point, below which the bulls will again start getting nervous. Advance 413 to declines 87. Amazing advances after yesterday's complete reversal of 450 to 50. So obviously stocks have done well. Yesterday also the FII cash outflow was 8,200 crores, but just look at this figure of 13,000 crores put in by the DIIs. So DIIs are powering the delivery based transactions in the institutional windows, and they are picking up whatever FIIs have had to sell. Usually all these transactions between FIIs and DIIs are cross transactions. That is why mostly you will see one is on the selling side, one is on the buying side, uh, because neither can FIIs sell to the market because there is not enough depth, nor can anybody buy from the market because the stocks will start hitting circuit. So these are back-to-back deals which are negotiated on the phone, and once both sides have decided that yes, we are going to trade this stock at this price, they come to the institutional window or the market window and they do the cross transaction at that point of time. Heat maps today all green, largely green. HDFC Bank coming up very strongly along with Reliance at plus 2%, Mahindra and Mahindra 3.5%. Trent after entering Nifty 8%. This is a surprise. Mostly after entering Nifty, stocks get subdued, but Trent and BEL both in a big move upwards, 8% and 5%. Adani Enterprise also nearly 5%. Adani Ports nearly 5%. L&T up 2%. Coal India 2.3%. Bajaj Auto also 2.3%. State Bank of India up 1.4%. Rest, there was some still slippages in the banking and finance space. Titan lost more ground. JSW, Tata Steel. Now, steel stocks are now confused. Should we follow Indian trend? Should we follow the Chinese trend? And they are completely confused right there. Nifty next 50 more green. So Nifty next 50 is always like higher beta of Nifty. And you can see stocks that were crashing yesterday, IRFC, PFC, REC, uh, Zomato, HAL, all did very well today. ABB, Siemens, all the capital goods sector. Varun Beverages 9% after yesterday's dribbling. So amazing comeback, and suddenly the weakness is a thing of the past almost. Sectoral indices all up except metals. Metals, of course, the unique situation of Chinese and the Indian market follow. IT, FMCG, minor gains at 0.5%, but the major gains came in public sector enterprise stocks, which had gotten beaten down a lot, 2% there. Autos up 1.7%, energy infra consumption all more than 1.5%. Pharma surprisingly up 1.4%. So now pharma at 1.2% for the entire month is the fourth or fifth segment, which is in the green for the month. Metals, of course, leading on a monthly basis along with consumption, and auto stocks also doing quite well. On a week to week basis, pharma is the only one which has moved into the green. Rest are all in the negative territory so far in the last 1 week. Public sector enterprise stocks, as I was mentioning yesterday, this is a very crucial bottom. Virtually, if this bottom broke out, we would have gone and retested this bottom, but a bounce here. So yesterday's and today's bottom becomes very important. You can see Power Finance, IRFC, HAL, etc., doing very well for this particular sector. Paytm, remarkable sort of turnaround after yesterday's drubbing, 15% up today. So the earlier days of Paytm getting smashed on every down day and not recovering on up day has changed. You can see there has been a contiguous rally in the last 6 months. So Paytm has done really well in the last 6 months, no doubt about it. Of course, there are people stuck at higher ground, but this is a very encouraging trend where on every up day, Paytm comes back up very, very strongly. Finolex Industries, as we were mentioning yesterday, also doing quite well and going forth over a monthly basis. Should you sell based on news is the focus for the day. Now, usually what is happening is that people react to news, so whether they read it in the paper or somebody tells them or they read it online, people react to news thinking perhaps that, this news is just fresh like a hot, hot off the oven bread, and that nobody else would know it. I just saw it on TV, it has just flashed, so maybe I can go and trade based on that. So this is a newbie sort of thought process. Let me tell you, before the news is out, a lot of folks know about it. So before the news will hit you through any channel or any publication, the promoter, of course, knows about it before that event has even happened. Let's say there is a news about a new acquisition of a company by another company. These teams are now meeting since months to get this merger approval done within their company. So there is a team in company A, there is a team in company B. Of course, both promoters know, both promoters, accounting firms know about this, their legal firms know about this, the management teams which are meeting know about it, the office typist who is typing the minutes of the meetings on each of these meetings know about it. So to think that it has the flash has come and nobody else would know about it, and I'll be the first one to react on this news and make money on it, you are being very, very naive. Virtually the whole world knows about it except you. So normally you would see that the news is already discounted normally. I mean, so let's now see some examples. So let's say take Ola Electric, for instance, listing at 76 rupees, and then there's a surge 100% up, and there's a lot of, talk about it becoming the next whatever multi-bagger in the market and so on and so forth. And then, it starts to slip. It starts to slip. It starts to slip. And recently, very, very recently, you see some very big negative news start to come out. And once that is done, I mean, all this is already baked in. So people already know this company is not worth this much, or whatever may be the reason. And there's already a drawdown of that kind. And today, when there was reasonably bad news, the stock has actually gone up. So things will react in the opposite sense because the whole world already knows about it. And just today's example, if I see the election outcome was discounted in the favor of the Congress. So markets were falling the last few days. Now, today there was a reversal, and hence there was, a relief rally. If today Congress had won and market had remained flat, there would have been no reason to go and sell now, right? Now, so dilemma of discretion is that, you can keep thinking about it, whether this news is, or the events that have taken place is already discounted or not. That is very, very difficult to determine. Stock has gone from 100 to 150. Now some news has come. Now will it go from 150 to 200, or will there be a sell on news going from 150 to 120? This is extremely difficult because on a valuation basis, you can't really pinpoint the next 20% of move, because I mean, valuation could be 2x of the normal or half of the normal, and both are still okay, right? So you need to find trend based. Like for instance, in Ola today, there has been a great move. Now there is a dilemma of a discretionary investor, whether it will go up, whether it will go sideways, or whether it will fall more. You have to make a decision basis some framework. It cannot be based on what you're hearing. So, but at what stage, if you're holding, will you exit? At what stage should you be allocating more? What is your reason to buy today? What was your reason to buy earlier? And that has that reason failed? So at what point should you be exiting? How much you are allocating? When you are buying? All these are a lot of discretionary decisions that you need to make. And over a period of time, you cannot be making great discretionary decisions if you are a normal person, because you will be making mistakes which every human makes. If you are a very exceptional investor, trader, I mean, I'll set those 2% people apart. But in normal situations, you will not be able to make decisions easily, because you are getting bombarded with all kinds of news, positive and negative, and there is price movement, and some of it is discounted, some of it is not discounted, and so on and so forth. So impact of news flow is, in this case, for instance, there has been some news flow regarding slowdown of sales, uh, you know, uh, news flow regarding complaints, 80,000 complaints on this company, news flow regarding some skirmish between the promoters and comedians. So essentially, you need to find a framework how to deal with this situation, whether even you should, have anything to do with stocks with so much news around it. So if we go back to our sort of momentum style of investing, the same thing was happening in sort of the Zomato case study also. There was huge amounts of volatility, stock crashing from 170 to near 40 rupees, and then, all kinds of, people leaving the company, and then suddenly around 80 rupees, you realize that, there is a trend going upwards, and you caught the trend, and, you went on with the trend and made a multi-bagger out of that. So a framework which allowed you to follow a trend, actually helped you in this entire process. So the non-discretionary way is basically don't try to predict or try to assess what is the discounting, whether it will go up, whether it will not go down. Have a plan, have a trend following strategy. No news will hurt you in that way. If there is a fall in price, whatever the news may say, and if it is, breaching your exit point, you get out. You don't care about what the news is. If there is a positive news, stock is going up, and it makes you, your decision on when to buy, get a trigger on that news, fine. I mean, if the price has moved in your ballpark where you had to buy, and there is some news behind it, fine, you don't bother about the news. So this is how you will sort of, remove discretion. You will remove any biasness in your approach based on any news, because you don't know who has built what kind of position behind that news, which you are of course getting it much late. If you would have noticed, many times when there is a fantastic news about a company, you go and buy it, and that is a top. And many times when you are selling based on some news, the stock has made a bottom. This is exactly because these news are already discounted in, and your decision based on that news is actually the last thing happening in the market. So try to make lesser and lesser discretion in your buying or selling approach in your plan, and have a more sort of a non-discretionary approach towards the market, which will make your investing extremely smooth. Please tell me how you like this content, whether you agree with me or not, first of all. And if you did, please do like and share this video along with your friends and family, and I'll see you in the next one. Bye.